This is Justin Pulitzer. This is my weekend video review for Sunday, June 14th, 2015. Good amount to cover. Let's jump in. So I have this pulled up on the yearly chart, and I wanted to do this because I wanted to show you guys something. You can see here we've had like this very begrudging move down, and it's kind of held where it's needed to, roughly at about the 100-day moving average. But if you look at this pattern here, it looks to me a little bit like this pattern here, which is a little bit disturbing because we see how low this wound up going. It wound up being a channel low test. Now, it's a little early to call that, but you can see this was also this sort of begrudging move down and choppy in range. We had the bounce here, and then whammo. The failed bounce, I should say. This is a little bit more tight in range, but the risk, in my opinion, the major sort of tail risk is to the channel low. Now let's bring it a little bit more modern time and bring it into a more current time frame and show you the levels that are really key to see if that will or will not take place. So I don't know that that's going to take place so easily. We have a end of month quarterly expiration coming up in a few weeks. So like I said last weekend, we have a bit of a narrow window to go lower, but I do expect if we do go lower ahead of the quarter that the last week will be window dressing in a rally. Now, if we do the opposite and rally ahead of time, there could be a lock-in sell-off for that expiration. Now, I usually do what the move lower could look like first, but I'm going to do the move higher this time. Now, the move higher would be the expected range for SPY next week is $3.70. Now, we could easily, if you look also at the high call OI, the 210 level is the biggest and, believe it or not, the most likely. The most likely is that we just stay chopping. Although I need to see the updated OI after Friday and after this week. It could easily shift. As of now, though, you have 210, 212s as the next big level, and then 214 and 215 would be the absolute max in my view based on the OI and the calls. And that would also be consistent with like this pattern of kind of looking above range and then failing. Again, here looking above range and failing, and then this would be again looking above range and potentially failing, although that call is way, way too early to call. Now, a move down, there are a lot of key low references here that will probably make this level kind of begrudging to get to. First and foremost, we had this 208.97, which is a clean breakout here. This moved back down into mid-range, was choppy, and then we kind of have just been chopping ever since. So this level here, which you can see held the tail line of my sort of upper distribution, is a key one here at the 207.69. Oddly enough, that is one of the highest OI, I believe, highest OI after the 210. And then 208 and 207 are large. There's also this low here, which is the 208.76, which is in all effects and purposes, 207, which I said was the high OI. And then a move down to here, which is the 204.14, which, look, bingo, coincides with the 61.8 Fibonacci retracement and is just below the 200-day moving average, and is also a volume distribution. So I think this area here, short term, will be a little bit harder to get through. If we do have some type of knifing action on the Fed or news, 201.90, and then we are talking the channel lows. I do not expect that to happen this week. It is possible. We do have the Fed, but it seems highly unlikely. If it does, that is a absolute screaming buy because it would be so overextended in such a short period of time. The order of operations here is going to be the key. If we do come up above this high here, this 212.09, like I said, there is some high OI up here, and it might be a little bit begrudging. But I think that this move here would be so unexpected based on the curmudgeons that are on the stream and all the fear that has been peddled that we would see the all-time high and probably likely still higher to continue with the pattern. If we do come down lower, these levels are the ones, like I had discussed, the high OI ones, that I think would be these reference levels as we are in a responsive market are the ones I think that will hold. So that is my thesis coming into this week. IWM, and we are taking our time to load. Clearly, much more relative strength. We are still up by these highs. We're nowhere near the 50, nowhere near the 100-day moving average. And this has sort of been like the leading indicator tell to the market. So as long as this is above these highs here, this 125.93, you can see we're just like sitting roughly around there. The close here, believe it or not, look, was 125.93. The high here was 125.93. Coincidence? Probably not. So we should know pretty early next week if this falls out of bed that things might accelerate to the downside. If we're sort of just hanging out here drinking stout, so to speak, we might wind up seeing a little bit the high still higher. Qs, also some strength, but a little bit weak. We're roughly holding the 50-day moving average. We are below the 109.42, which to me is a little bit disconcerting. We have a higher low in place here, but we are now making a lower high. So this could be some type of a compression in range and chop. If we do fall out of bed here, I've been saying for the last few weeks that it's sort of going to be hard to really completely collapse out of, at least sort of toward this area. There may be a sharper move down lower here. We do have a reference low here in the 107s, but you can see all the way from the 104s, 105s, and 106s, there's a lot of reference levels there. This is the start of the next volume distribution, and I do expect that to hold at least short term. There could be some type of an overshoot to the 61.8, but that would really require Apple and Google falling out of bed, and I'm going to show you here. Apple has really just been very choppy. You can see it's been making some lower highs, sort of some higher lows, and just been kind of choppy in this big range. So the risk I really see is Apple coming a little bit lower to the channel low, if one of these channel lows, potentially this volume distribution, and then I expect it to kind of catch some support. The 125 area has some decent OI, and there is some more down here, also these reference lows. So if we do wind up coming lower in Apple, I do think that would be the area. The area on the upside would be the downtrend line here, up around the 131s, the 130s. There is a lot of high OI in the 130s, particularly on the monthly contract. So it wouldn't shock me to see it come back up there. There had been a lot of OI. I actually have to do a little bit more research on that, up at the 135s. So maybe if we do have a reversal in the market, Apple kind of powers it up, maybe into quarter end. Apple is sort of a name that a lot of people would like to own. It could be a sort of, I guess, window dressing play higher if we break this downtrend line in particular. I would expect this triangle to fill rather quickly and to get back up to a test of the old highs. So I'm sort of in limbo here. I have a call spread on here. It had been a risk reversal call spread, being short 123 puts and long the 129, 133 call spread. I rolled those at the highs here the other day. That wound up being prescient, although it's a really small play. I have some put ratios on with the, I think it's the 127, 125s expiring this week. So a move lower to me wouldn't be all that bad. It actually wouldn't kill me if it's a controlled move lower short term to bank on that, and then maybe longer term we come back up higher. But Apple really not showing too much other than a lot of chop. I think it's just going to be a range trade for a while. Google also really just a range choppy mess here. I don't really see anything with Google until this kind of low gets taken, and it could come back down to the 513, or we definitively break over these 560s for a move back up to the 580s. So that's sort of what I'm watching for in those two stocks. VIX. VIX is just kind of chopping. It's in this sort of lower part of its range, getting a little, actually I would say a little bit mid in this range, but it's still making lower highs. We have now a higher low, so the question is going to be if we can come up through here and then re-challenge these 17s. I think it's very possible. When the VIX is at this low range, I'm not a seller of volatility. I'm more of a buyer in options. When we do get more expensive, then I become more of a premium seller. VIX, again, really middling here. It's above the 50, above the 20, although the 200 has been resistance. So we are gapping down in the futures here Sunday night, so it wouldn't shock me to see a retest within short order of that 200 MA. and that sort of has been the litmus test, whether it's sustainable over there. You can see moves over here have not been sustainable. So if we can start sustaining with multiple closes over the 200, then the pattern starts shifting, but you still need to, it still has its work cut out for it, having to take the 1636 here, and then the real line in the sand was this double top here, the 1720. So anything below there to me is still sort of range chop, BTD. Anything above there to me gets a little bit more iffy. TLT has had a bit of a reversal here off the 61.8 Fibonacci retracement here. I had discussed doing a risk reversal call spread. I'm still in that. I'm looking to take those puts off, although they do expire this week. And then the call spread, I believe, is like 35 more days to expiration. We are gapping up in TLT in the Sunday night session. I'm not looking for that much of a move, but I am looking maybe to get up into the 119s or the 120s here, maybe 121s. That to me was really sort of where this volume distribution sort of starts to tail off. And I think there will be some interested sellers there, considering this move was so sharp. And you can see the 61.8 fib is up there at the 2040. So I think somewhere between that 50%, which is 1941, and 2040, maybe with a little bit of an overshoot, will be the kind of the area to take profits in that. I will be out of those puts likely on Monday morning. They will be probably 0 or like 5 cents or something, and I'll keep the call spread on. Maybe I'll look to take some of that off. I did talk about some trim and trail here, and I am still riding some of that for the upside. IBB, again, choppy. We still have not taken definitively this high here. You really need this to be over 368.25 for still higher. We are consolidating. The 50-day, I guess, is coming up. That's where the backside of the old downtrend line would be. So that to me is sort of the litmus test in this range. If that breaks, we might see a gap fill down lower. If this extends here, we will likely see the highs again. The one I've liked is Gilead, and man, has that been a I like their earnings. I had said that this to me was a buy the dip stock. It wound up dipping, so you got your dip pretty quickly, but now you can see we've rallied back up, and we are close to, we are actually through some of the highs. I would be a little bit more cautious here. I know a lot of people have had the 115, 120 call spread on. That's one I had been discussing. It's time to probably start taking profits on that. The 1.618 Fibonacci extension is up here at 122.33, and you can see that coincides roughly with the channel high, so there could be some window dressing into the quarter end, but I'd be looking to be booking some profits here. I do still think this is a buy the dip stock, so anything back into like this range here, like 110 or below, somewhere between 110 and 105, I think that's a good area to sort of buy call spreads or to sell puts or the both or what have you. Ambarella, not one I've really followed a lot. I'm sort of sorry I haven't. I mean, look at this move. This to me is getting parabolic, though. I think it's probably time to look to start to take some profits in this. Yeah, the stock can still go higher. It could be a, the question is going to be, is this a lock-in trade for quarter end, or is this going to be one that all the funds jump into? I would think it's probably going to be more of a lock-in play. I'd be looking to buy this down significantly lower. If you've kind of got the fortitude for this, I'm not really a top picker. I don't love doing that. I'd be looking to do some short call spreads, like upside call spreads, or buying like put spreads. I don't know if I would do ratios, but I would do spreads if you're looking to play this short. I would not outright nakedly short the stock. One I don't like is GoPro, but I don't like the company, but I think the stock has some potential for still higher action. As you can see, it's been in a defined uptrend for quite some time. I'm trying to figure out the points to draw. This looks good enough, although you could even draw a secondary trend line here if you're so inclined. The stock to me, all right, whatever for now. You see what I mean. This needs to be adjusted from this low here, but it is above this 54.06. Anything above the 54.06 to me is buy the dip. If it breaks below there, you probably have room to the 50-day moving average. If you want to do some type of a put ratio, I think that would be a pretty good trade for a little bit of a pullback lower. But anything above the 54.06 to me is still more bullish than bearish, and I think it did get the 38.2, but there could be some room to some of the higher Fibonacci retracements. So GoPro, cautiously optimistic. Amazon, still in chop range. You really still need to take this 40.39 Anything above that to me puts the highs in play. I do think at some point that this 484.73, which is the 1.618 Fibonacci extension, will be in play. You can see this has just been in consolidation mode, burning off a lot of the excess coming into earnings. This is typically, it is starting to violate the channel, but more by time than by price. So it wouldn't shock me to see this to take off rather soon. It's seasonally kind of out of favor because retail trades and tech tends to not be as strong in the summer, but I do think that Amazon will see higher. Anything lower is a BTD, at least short term, particularly if it's sort of toward the end of the summer. BABA, choppy, messy piece of, insert expletive. It is holding the 50-day moving average, so I would say that there's some type of a row play there maybe, with some kind of give down to the channel low here, which roughly coincides with the sort of the gap low of the 84s, 85s. I do think that this area should hold for some still higher movement back up a bit, but you can see we are starting to make lower highs and lower lows. Stock is really just a piece of junk. I'm really not looking to play this much longer. I have I had played this long, took some profits. I still have some long in it. I'm kind of looking to get out on a rally. I'm not really such a fan of this stock. It just doesn't behave well, either up or down. BIDU, like I had said, back to the middle of the range here. Not a super-duper fan of this pattern. I think it's just going to be choppy like this up until earnings. Then we'll sort of get more of a decision. We did have a little of a look below range here. It kind of checked back and is now sort of accepting a little bit back more into range. Wouldn't shock me to see a gap fill here, although we are coming to the gap, sort of the gap high. So I wouldn't shock me to see this kind of come up and then sort of back off a bit in this sort of choppy action before still going higher. But, we are starting to make some higher lows, higher highs, albeit in a bearish context. We are starting to sort of break the channel, although we did here and it fell back below. So just a little bit cautious. These Chinese stocks, if the market does decide to roll over, these stocks are not going to fare well. If it decides to rally, they will do well. They're sort of beta plays. There could be a play like you can see the backside of the old uptrend line coincides with the gap fill. So it wouldn't shock me to see Baidu kind of do a check back before lower, or maybe it accepts higher. But this to me here would be a great right or right out play at the gap fill. Also a high volume node. There'll be a lot of people made whole up here. And to me that I will probably be playing that for some type of a defined risk row trade. That is my story with that, and I'm sticking to it. Facebook, chop. I think this stock will go higher eventually. My biggest concern for this, though, is a strong dollar. That has been what they've been warning against in their earnings reports. If you're kind of the Chicken Little, this 50, 20-day moving average confluence here, roughly, let's say, mid-80s is sort of where you really need it to hold. If it gets below there, could have a move back lower. I have short puts in this, and I also have a put ratio on as my hedge. Short dated, they are the 80-78, so if this thing does come lower, I could profit off of that in the short term. If it winds up going lower, hey, my longer term play works out. I usually like to think multiple time frames. I just think chop at the moment. Twitter, Costello, their CEO, is out. Jack Dorsey, one of their founders, is in. The stock gapped on this and then proceeded to sell off. I think that the risk is they did reaffirm guidance, but their MAUs, which is their users, are maybe declining for the first time in the company's history. So I think that's been part of this hesitation. I do think that the stock is eventually destined for higher to see the 45s. But again, this is an order of operations question. There is risk down. A lot of people have been citing 35 on the stream, that is, or on TV. That to me isn't really the level. It's this 34.62. I could see that coming down here and then bouncing off. The real risk, though, on a bigger move with the market getting soft, and I've said this in prior videos, is back down to fill up the triangle to these 29 lows. So if this snaps, be really careful. If you're long, you might want to put on some protection. That's sort of how I'm thinking. I nibbled a little bit here. I have not been adding. I don't add to losers. I am slightly underwater on this, but nothing really to write home about. If this does get a move back up into this area, I'll probably get rid of it. I know a lot of people have been talking about it as a takeout play on the stream. But when in situations like that in Yelp, I believe also in Yelp longer term, but in situations where the short-term fundamentals are deteriorating, it's really hard to play it that way. LinkedIn holding into the gap. I think that a move back down for like a gap fill down here or a retest here of the breakout is probably a row buy, at least for a call spread situation. I expect this will, if social is to sort of stay strong and rally, that we will see still higher levels in LinkedIn. I'm a little bit cautious though on the space. My favorite, as everyone knows, is Facebook. FireEye, beast mode, one of my favorite stocks for this year. I expect still higher levels, but I do think that it does need to, it has been consolidating. I do think we can see the channel high, but I would be more of a dip buyer than a chaser. You can see we've had a lot of news that moved it up. You've had the US hacking, you've had Chinese hacking suspicions. I think that this is a buy on dips, and I'm not as much of a chaser. If you want, maybe do some hedging. If you're long, you can buy some put ratios or put spreads. The IV isn't exceptionally high in there. CyberArk, also fairly bullish chart, although it's not as good as FireEye in terms of chart. It is holding in there, but it hasn't been making sort of new highs in the range. It's actually been showing a little bit of relative weakness. PANW, another one I really like, getting a little bit close to the channel high, so I'd be looking to sell this into pops, but I do think that this is a buy the dip stock if you can get anywhere back into range. You can see on a longer term chart, the 50-day moving average has been really strong support with some minor violations. You can see here, here. So any move back to the 50 to me, preferably if it coincided with a breakout point, would be an absolute right or right out buy the dip long. Green Mountain Coffee Roasters. This isn't one I really follow or track that often, but I did say that it was a right or right out play at the Coke gap fill, 80.88. Unfortunately, this happened Friday, and I was preoccupied with some other stuff. The alert went off. I unfortunately wasn't fast enough, and the stock rallied really fast off of there. So I'm looking for this as a right or right out play over 84.43, which was Friday's high, for a move still back into range. I do think it will test the gap, maybe fill it. Or if there's some type of a little bit of a rollback, as long as it doesn't take out this low, this 82.42, then I think it's still, and you can see that's sort of where the body is, I think it's still sort of okay. I'd actually, believe it or not, though, prefer it on strength to pay up for still higher. But I do think GMCR is a good right or right out type of a play. IBM, I had said that, where are we? Here we are. That a move back to close to the 165s would be a right or right out long. It did wind up coming back a little bit further to the 100, wound up having the bounce. Now it sort of still has to prove itself. So I would be a little cautious as long as it's below 168.54. Above there, I do think it will continue higher. I do think that this gap fill to 182s will fill at some point, assuming the market is still holding in okay. Netflix, really been strong. They are announcing a stock split. I had said back here that if you were long, just trail up stops. It was a little bit of a hard stock to chase just because of trade location. But as long as this thing holds this trend, and I would be a buyer back on this trend, if it winds up coming back down and retest the backside of the channel, back into range, and I do think that area is good for right or right out. Although I do think that this stock here is kind of blowing its brains out. I mean, look at this. I mean, the stock was up like 25 bucks here. The next day here, it was up like almost another 40 bucks, and then it just trailed off. I mean, this is a lot of movement. I mean, look at how this thing came from the channel low and gaps. I do believe it will come back and retest into this area. I just don't know when. I would be a buyer back into this sort of like gap bar range. A little late, I'd be taking some profits. I mean, the stock to me is getting a little bit extended here. And if you're first entering and there is any bad news, like particularly on earnings, you might be having not the best trade location buying this on some type of a parabolic move. That said, stock is going into the stock split. It's probably going to stay long and be a buy the dip stock until the stock split. I just don't like chasing it at the all-time high. Please, for me, at least a little bit of a pullback. Price line, choppy, really nothing to see here, just in range, making slightly lower highs, kind of lower lows, just middling. I do think that this thing is destined for higher, longer term, but they're probably dealing with a little bit of issue with their European business, and maybe the currency is kind of affecting them. The airlines have also been weak. I'm not going to discuss them in this video, but I may do some chart work on that. I'll discuss maybe the airlines a little bit in Periscope. I think when tune in on Wednesday or Thursday, I'll do my Periscope. And actually, it will be Wednesday. Thursday is not going to be good this week. So Periscope, by the way, will be breaking news. Periscope Wednesday. Save the date. TASR, one of my also favorite stocks in terms of the story. It did wind up retesting the highs here. I think there was just some responsive sellers because it was so many days up. I am a buyer of dips on this, particularly if it comes back mid-range and a trend line in the backside of the prior downtrend. I think this area would be a great right or right out area. I'm doing it with call spreads, and I would be looking to kind of load the boat if it does wind up coming back down much lower. I think that they have multiple years of growth, particularly with their body cam business. This was down a little bit, I think, on some competition and just some responsive sellers, but TASR, I am a buyer on dips. And lastly, we'll leave it on Tesla. This sort of has popped up, it filled the gap, and now just kind of middling. I do expect some chop. But longer term, and Tesla was bullish last summer, so I think that it's going to retest the 265 area and potentially the all-time high all the way back up to the 290s, and maybe have a Fibonacci extension higher to like a 2.618. I'm sorry, a 1.618. I don't have it on my chart here. Let me just write that down. I'll mention the Fibonacci on the stream this week, and maybe I'll save it as a bit of a tease for Periscope. But I do think that this is fairly a bullish thing. I think they have the Model X. I think their news cycle, and particularly with my view on oil, that I think oil is going to retest 75. I do think that you can see this is roughly just chopping in range. I do think it's going to see 67s and then 75. So I think as long as oil is sort of the wind at the back of a stock like Tesla, and the news cycle is in their favor, considering they're going to have the Model X, and some other models, I do think that this stock will see higher. If it does wind up pulling back, this area between the 50 and 200 MA, even maybe down to 225, I do think that there is some room down there, and I would be a buyer for a buy the dip type of a play. But I do believe Tesla's higher. The risk here to me is more market related than company related. Anyhow, we could leave it at that. My handle on Twitter is @JustinPulitzer. Be sure to follow me there. If you're not, do so. I post these videos, and I post the links to my Periscope and various other tweets on stock trades. Be sure to hit the like button on this video if you liked it, and just hit the subscribe button as well. You'll be notified when new videos go up. So with that said, let's have a good week. We have the Fed on Wednesday. It's a press conference. Let me talk a little bit about that. I do believe that if the market is a little bit weaker into the Fed, it's quote unquote safer. If we rally early in the week, be a little bit cautious, just with trade location, I do think that the Fed. So here's the story. So the Fed is getting a little bit cautious. They've been talking a lot. I think that they are trying to keep the markets from kind of boiling over, although the head of the IMF, Christine Lagarde, the GDP numbers and the durable goods orders and the consumer sentiments are sort of middling. The quality of the unemployment numbers haven't been great. So I think the Fed is kind of trying to talk down the markets more than actually looking to enter a serious rate cycle. It's possible they go. I mean, there's a ton of talk about it. It just doesn't make sense to me, though. The economy is clearly slowing. We may be hitting peak earnings. I don't really understand what the impetus is to raise. There really isn't that much headline inflation. Yeah, I get it that their employment headline number is good, but the under the hood kind of look is the internals, if you would, of the jobs numbers are not good. They are all like sort of temporary work, bartenders, waiters, waitresses, and carnival ride operators. Is that really what we've become, a nation of these? I don't see with the social unrest that's happening what the impetus is for the Fed to raise. If they want to go, they can go. Obviously, I think they'll do their best to talk down the market. And if they do, I do not expect them to go this meeting this week, with this Wednesday. The earliest would be, I think, is September with an event with a press conference. I think that they did cite Greece as a looming issue. I think they're definitely going to be a hold this week. If they go, that would be a huge surprise. If they do, the market should be down tremendously huge because people haven't been expecting that. I'm not expecting it. I do expect some double talk out of the Fed. I do think they're going to talk about their data dependency. That day, Wednesday's range, is going to be the key for the market. You can see we are below this big emotion day low. I had discussed that being key. We kind of looked back into range, mid-range, and then a little bit even higher than mid-range, and then failed. So this bar here up until below 210.20 to me is iffy. Anything above there is sort of back into range. But Wednesday's range, the high and the low, above that high will be more bullish. Below that low will be more bearish. So that is my kind of playbook for the week to come. So that's my story. I'm sticking to it, and we'll have a good week, and I'll see you on the stream. Cheers.